Okay. Get there, and let me get there. Okay, guys, I should be up and running. Just let me know if you can hear me loud and clear. I'm always paranoid because I just had a problem then. Okay. Right, so just let me know if the sound's okay, and we'll get going. Where are we? That's what I wanted. Lauren, yep. All good, fantastic, Jason. Lauren, how are you, mate? I am raring to go. Sort of raring. Raring a bit today, but Scott, how are you, mate? All right, so welcome to TradeSetup and the live stream for the 18th of May. It's been a good day today by the looks of it. We're up 80 points or thereabouts on the ASX at this stage, so it's barreling away. And if anyone watched the action on Friday, they had retail sales in the US, the biggest sort of drop they've had, I think, since they started analysing it. I don't know when that was, years ago. That's the biggest sort of drop in data they've had, and the market pretty much 10:30. That was, the market opens at 11:30, I think, and that was it. It was off and racing. So it did pull back a bit, and then held a high low, and then off we went into the close on the US. So they're brushing aside. I can understand retail because when everyone's in lockdown, they're getting hit. I think a lot of people will be anticipating that all this, I don't know, the funds they've got is going to come out, and once they get out of lockdown, it's going to go back in. It's going to flow back in. But I think a lot of it's going to have to do with jobs and who's going back to work. I mean, there's going to be a lot of people that won't ever get back to work. It's just the nature of it. I think there's going to be companies that are going to they're going to cop it a bit. Now, is that sound? If anyone's on TradingView, does it sound okay there? Should be coming through. If not, just log out and log in again. I know it is coming through okay. Log out and then in again. I know that we're getting sound through okay. Got it through another system. Oh, good, fantastic. All right, so we're right to go. G'day, Pete. Please, got you. I'm sure you know each other. Awesome. Um, yeah, so I don't know what I was saying then. So the US is brushing aside a lot of the data. I think a lot of it's obviously coming down to, which we've known for a while, is coming out of, I would say rehab, coming out of well, it would be rehab from all the stimulus. They're coming out of lockdown, getting back to work. Everyone's just assuming that it's going to kick off okay. I reckon there's going to be a lot of jobs that are going to. We had JC Penney. They've been going over 100 years. I think they're going into bankruptcy. They're trying to get bankruptcy through as quick as possible so they can shut down the stores as clean as possible and obviously not get hit as hard as what they would expect. So they're bankruptcy, and there's going to be some other ones. I don't know about it's just going to come from retail or whatever. But I would assume there's going to be a lot of companies. The longer they're in lockdown, the harder they're going to get hit. And I think there's going to be a lot sort of flowing through that way. I don't expect at all for the virus, the number of cases of virus to just plateau and not increase. I think that's going to increase, and it's going to be interesting to see how everyone takes it then, what that's going to mean. Is it going to mean that people don't care? They just, keep working. The cases are going to spread. There is going to be pressure again on the health system. I think a lot of the lockdown has been, a lot of the work done in the lockdown has been trying to get that health system up and running as best as possible, especially in the US, and in Australia has been fine, up and running as best as possible. So when the second wave comes, they can actually handle it, and that's where the cases. I think if they can handle it fine, there's not going to be as much deaths, obviously, because everyone can get support, everyone can get sorted out. So that's my views. I don't see a lot of good out there, although the market's brushing it aside. Day after day, they're brushing it aside. Data comes out, more jobs than expected. Bang, the market goes up in the US anyway, and that's dragging us up, which is fine. I mean, we had bigger unemployment than you expected. The percentages weren't there. They weren't counting half of the unemployed. So the number of new job losses was more than they expected. Yet the unemployment rate was less, and that's just the way they figure it. Um, yeah, no, I agree with you, Pete. It's hard to see how it's going to be taken, and I'm a firm believer in it's buy the room, sell the fact. So they're buying it up, and as soon as that comes out, and everyone thinks they're buying it up because it's going to be okay, they're happy with those numbers increasing because the economy's getting back to work. Bang! I would expect that it's going to get hit again, but we'll talk about the ASX in just a moment, and a lot of the other indices. The ASX looks like it's ready to break up, if anything. There's been some buying pressure there. We got a short on the SPY was it last week, which is great, and then another short on the ASX, which got cleaned up pretty much that night. We're up over 100. Then bang, turned around, stopped us out, which is was hard because I should have really that night lowered the stop and got done in about 20 points instead of what we did. I can't remember what it was. That's just not been at the computer, and it's my fault. But that anyway, that short was going great, and then it just turned on a dime. So there's some serious pressure coming in on dips. Whether they're trying to keep it there, whether they're trying to move it, it's the algos that are buying into weakness and catching everyone out. Because don't forget the algos to kick off, if they could really start moving it around. They need people to get stopped out because they're not gonna work very well if it's just trying to drag in new traders from the sidelines. Because if you don't want to jump in, you don't want to jump in. But when you're in and they sort of drag the market down, and the market's gone down, the algos start flicking off, or people start buying it up. There's a lot of people that are just started to get into a short position, and then all of a sudden they're going to chase their tail jumping out, and that's what creates those moves. You need the fuel in the market to get squeezed out. And if it's, even if it's a continuation of the trend, you need those pullbacks. That's going to drag in a few more people, and then it's going to drag in a few sellers, and then it gets squeezed out again. So that's just the way the markets rotate, the way the markets move. So we'll have a look at all that. I'll get rid of that. I'm just going to make sure that that is showing. Is that chart? I'll make it a bit smaller actually. You should be able to see the chart okay there. I'm assuming. Let me just see something else. Um, yeah, they're coming through okay as well. Get rid of that much chart as possible. That should be good. Right, so I just want to go through today. Obviously, leave it open later on so you can put in whatever you want to have a look at. Get my professional opinion. Whether it makes sense or not is a different story. But I'll take a look at that. I'll go through just some things I'm looking at. Um, that's the ASX. I mean, you could have said it's rolling over here. It got bought up rolling over here. And now, for me, it just keeps flushing out the lows. It keeps dragging in those shorts and squeezing them straight back out again. That's not a good sign if you're bearish. That's more of a good sign if you're going to be bullish. That could be consolidation. You got a secondary leg up. Now I'm looking at the 1 hourly here on the ASX. Just tick it over to the 4 hourly. So that was a big move down. That was well and truly selling. That was just, I wouldn't say euphoric, complete fear driving that market down. All right, then we got bought up, and there's been talk this whole time saying, and I still don't think it's over, but I keep referring back to the GFC. The GFC, the market sold off, and once we all figured out what was going on, it was starting to bounce. And the problem is, once we start figuring out it's a massive problem, we were through the GFC, people were shorting and people just wanted to get short, or they're selling, or they're getting out. The market kept driving high and kept cleaning people up. So I think what happens is, or what I feel the market will be doing is setting up, because there'll be a lot of cash on the sidelines, don't forget. A lot of people on the sidelines that are cashed up because of what they're reading. No, this is not good. Numbers in the US are not good. The number of infections is going to kick off. Companies are going to go broke. I'll stay on the sidelines, but there comes a time when you have to reassess. You just have to, because you either have to stand your ground or jump in. Because if this market keeps driving higher, which it is doing, do you want to be left on the sidelines? And this is what happens time and time again. It is hard, and that's why I'm happy to jump in these shorter trades, because it means we're taking advantage of the upside and we're not staying completely in cash. I mean, we are cashed up quite a bit still. We've only got a couple of positions. It's just that I'm not finding the greatest of trades to put my risk into. And a lot of it's got to do with the ASX. If the ASX looks like it's going to go down, do you really want to dive in long on a whole lot of these shares when they can turn quite quickly? Problem is now it's just not. It's starting to hold up. It's starting to look okay. Um, we're getting some sort of support. that looks like it could easily break up. I mean, it's not yet. Just because it's got high lows in here does not mean you dive in long to the hilt. It means that it's looking like it could, okay? But it's still got to prove itself. I mean, anything's got to prove itself. It's got to prove itself on the downside, which it hasn't yet, or it's got to prove itself on the upside. So if that flushes out that and we start to get this kind of action, we could go short and then find that it bounces again, and we're getting this kind of whippy action, and then it could drive lower, but off a lower high. I'd always be looking for these lower highs, getting short. If it doesn't drive through, we might have to get out. We might have to take a hit. But I think if the time comes and we're getting off those lower highs on the short side, and it does roll over, we'd be looking at something like, so it pops up and we start to drive lower and really crank on the downside. We might get a good little retracement and then go again. That's not coming out the best. But this is what I'll be looking for, because once it starts to break that support zone, that's what we're going to be looking for. Right? If we get off a lower high and it starts to just drive straight through these lows, then okay, if we're not short there, we might look for a bit of the first sort of retracement on that time frame, which could be the 4-hourly, the hourly. That's where we're going to start to jump in short, because then we know that something's starting to happen and this market is starting to roll over. Now, on the flip side, if we start to, we're lifting here, which we could just continue lifting, we break through here. If we start to get some sort of pullback, and these are important, we start to get a pullback like that. If we start to hold this high low, that's what I'm concerned, and I'll be probably happy to go long on the index as well, because that there is going to create just what we were talking about. We break up through this zone, which, look, the way I'm seeing it at the moment, I'm sort of thinking it's going to do that. 55, 65, it's only really 100 points away, which could be done in a day or so, the way it's going. If we break up through that high and we sort of retrace back into it, which you would expect, that's going to trigger some stops. If we retrace into it, especially if we do it in two legs, we don't just spike up and straight back down. So they're two different things. That spike up and straight back down is more stops getting triggered, no other interest from buyers, but this is buyers starting to step in support. They're soaking it up. And then sure enough, if we can build a higher low, that's what we want for a long, because that would mean that anyone that's going, oh, look, this is just a washout, we're going to sell into it, they're going to get squeezed out. Does that make sense? So we're always looking for who's going to get caught on the wrong side of the market. And what's more likely? Is it likely with this action, this is going to keep, especially if we pop back up again, is it more likely that this market's going to continue on higher, or is it more likely that it's going to roll over? With this kind of structure, I'm in the more likely camp that's going to rally. With this structure where it flushes straight up and straight back down again, especially if it's a good stop in it and it's a good retracement, this is the key, is that retracement. Does it grind down? If it grinds down, I'm waiting for that high low. If it spikes straight back down again, I'm waiting for a lower high to sell into. Okay, so two different things that I've got my eye on, and I sort of expect that to happen the way it's playing out. Or, I mean, if we start to fail here and we get a lower high, we might have to go through the process of selling. We'll stop above the lower high, see where it goes to, but this time be a bit more active on the stop, especially, that trade that we had. I can't remember what it was. I think it was in here. It was in here, that short, and then it turned around and retraced on us. So that short, there was nothing wrong with it. Okay, that was the price action. You got the washout. We went short in here. Okay, that was great with our stop above. Okay, we got down here, so it was a one-to-one there. It turned around and washed it straight out. So there's nothing wrong with that price action. The problem is it just held up. It held up down to that lows. It turned and reversed on it. So that reverse is what is going to create that movement straight up. So if we're anticipating, what we're looking for is just what kind of price action, who's going to get caught. So we know that there's shorts in there. We just happen to get caught with this move back up. So that's where if it starts to hold in here, in here again, we don't want to be in, because we're sort of expecting this same price action. We know that the shorts can build up with this move down. If they start to hold in here rather than drive down and at least retest that low, which would be sort of a break of that rising trend, if it drives down a bit lower and starts to spike through, that's when you might think, oh, hang on a sec. To me, there's no buyers willing to step up here, in the second time around once it comes back down again, or if it does come back down, obviously. But that's the way I'll be viewing it. So, I mean, I'm not the one just to sell it here because there's a high up here, because it could drive through, I'll get stopped out. I like to see my lower highs, and that's where time frames come in important. If you've got a 4-hourly here, we're looking for that action on the 4. Might be dropping it to the half an hour trade time frame chart to trade from. And anyone that's been following me for a while would, I guess, would understand that. But we're trying to utilize those different time frames for our setups. That's the action. If we start to fail, so these, you take a couple of candles on the downside, the lows, then you're dropping it down to the 30. If we can get a lower high on the 30, then we're in. And then we're going to follow it down and manage it. If we start to get that spike through, like we said, and retest this low, then I'm open for to leave it open a bit more to see if we can drive a lot lower. And again, that's going to work into what's happening with the US, what's happening with the UK, what's happening with the DAX. All those indices, all the major indices, they're all starting to drive lower. If they are, then you want to leave it open a bit. If they're not, and you get these bounces, they're struggling themselves to go lower, then you know that the bullish action is still in play. They're still willing to soak up the sellers, and potentially drive it back up again. So all we're trying to do is just pretty much what we did there. We're planning ahead. I mean, there's all these different scenarios, but you have to plan. What are we trying to do? Are we we will look for that washout, look for the lower high. Okay, I want to be short. If it just drives through like that and we start to test up to this upper level, what happens at that upper level? Are we going to get stops run and drive it straight back down again? Is that the level which I think sellers are happy to continue step in front of and sell into? Or is that no longer going to be in play? Is the sellers going to run out of steam up here and then buyers, it drives down, and then buyers ramp it back up from there? And then we want to be on the long side. So we've got these different scenarios, and just by doing what we talked about then, we planned ahead. All right. So if we see any of those, if you're not trading indices, which is fine, then it's what do you do with the shares? Do you want to load the boat? And you should be now setting up a bit of a list of ASX shares that are starting to line up, which is starting to show some good signs. And if the ASX kicks off, and we get this kind of scenario, driving higher through that 55-50 zone, what are you going to do? You're gonna jump into some shares. You're gonna jump in the index. You could just trade the index outright. Whatever you do, we will probably have a bit of a crack at the index if it looks like it's going to go up. We'll have a crack at the index if it's going to go down. If it's going to go up, we can probably jump into a whole lot of shares as well. But again, I'm still happy to sit on those lower time frames, not your daily. I'm just not convinced that we're out of the woods yet. All right, so that's probably a good chat about the Aussie. We've got Hang Seng. I mean, that's still driving higher. When we look at these markets, still driving higher. That's only that's a 5-minute chart. I can't get much data in there, but we're looking at this action when I did a stream this morning. Bit of a potentially a pullback and looked to buy in those, but it didn't really pull back. There was a trade off here, another good trade in here. Didn't get onto those. I just haven't had a chance today, but they're some good little entries long. We had the SPY, which is pretty much gapped up like we mentioned, but just has not shown any weakness at all. It's been soaked up anytime it pushes down. We're talking about if it does gap up through here and hold, we're going to test that 54.89 zone, which is done beautifully. So I wouldn't be shorting it here. I'm on the 5-minute. I would want to see that lower high. If we get that lower high, there's a potential for that to roll over and close that gap at 42. So in essence, if you're wanting to trade that, I could be looking for sellers to start stepping in a lower level. All right. Simple as that. Into the close, though, remember we're looking at the 5-minute chart, so there's a lot of data to come through. So that's what I'll be looking at in the SPY. I mean, of course, if that turns around blast through 89, then we could be a leg up to 55.43. But the market's already up. Well, it's up 64 points, so it's actually backed off a bit, hasn't it? Let's just see what's happening on the 5-minute chart. So you can see this. This is action on. This is the 5-minute chart in the ASX. So it drive up. It keeps getting soaked up, comes down, soaked up. A lot of that could be doing with the almost certain. You're right, Lauren. That's a good trader, covers all bases. So essentially trying to be a politician. I'm not one, anyone probably knows, I'm not one to say, oh, I'm bullish or bearish. I'm one to try to I don't care what happens up, down, sideways. I want to be able to trade it. So I want to be able to set myself up for what I see. I think the most important thing to do is always know what you want to see. If you want to go long, what you want to see if you want to go short. And then just once you've planned ahead, then you're basically just trading off your plan. All right. It's not, I know I've heard a lot of people say that, oh, you've got to pick a direction. Which way is it going to go, up or down? No, you don't have to pick a direction. You have to trade what you see and trade what you think is going to happen. If that starts playing out, so if I was, for instance, thinking about going short here, and I thought if we wash out that and start to fail, I want to go short. Okay. I could have gone short just in here. Great. Didn't work out. It did go down, but then it would turn around and washed it out. That's just the nature of the beast. I'm out. I'm out. I know where my risk is. I'm done. If I wanted to go, good opportunity here, blow down the open, we retest and we hold at a higher level at 51, 53.30. I'm thinking there, if we don't go through these lows and we start to get some strength come back into the market, I want to be long on a break of that high. Done. And my stops below, and that turned out quite well if you're intraday trading anyway. But it's the same for obviously your dailies. You're trading off a daily chart. You're trading off a half an hour chart. Yeah, you might be trading over a few days, some swing trading. Same sort of scenario. But I think it always helps to plan ahead. If you're not really planning ahead, I like that saying. If you're not planning ahead, you're planning to fail. In my book, and I think it's very important. So that's why I like to draw those pretty patterns. And like Lawrence said, be a politician. All right, so that's what I just figured. That's the ASX. We're only up 63, so we've just dropped 15 points. We're up just over 80, I think, when we started the stream. So it could be an opportunity for a late afternoon sell if all goes well. If this level can hold. I mean, I don't want to see this drive lower. So there's two different price action, and again, we're trying to prep it from here. If we just keep driving lower, back down to this level, I don't want to go. I'm not going to go short. I just don't see that as an opportunity because we could just start floundering around here, and then come when we open for the night session, we're blasting off again. Okay, and that could easily be a setup, but it's traded outside of the hours. It's traded in the overnight session. But if we can sort of hold here above these high lows, but then we start to get some sellers coming in late in the session, it just means the intraday people are not willing to hold overnight, and they might have to get squeezed out on the short side, and then we got opportunity on the downside. So Wall Street, Dow, strong again tonight. Today, not much to do there. Just at this stage, there's been a couple of intraday longs, but ultimately that market's still heading higher. AMA Group, we'll go over that. That's one that we didn't hit out. Look, I said 56 and it hit 55 and a half, maybe 55 on the share. So you could have got out at 55, but not 56 at this stage. Good spike higher. Either way, we're up on that. That's our, and I can see that's the structure we've been trading. We traded on the run up through that high at 45. It managed to hold. It was swinging between gains and losses for a long time, and I fully expected at one stage we're going to get stopped out. But the longer it holds between, swinging between highs and lows, holding higher lows, even if it consolidates, the longer you see it consolidate, and it's on the MAs, so that's important. Don't forget that's the 20 EMA and the 50. So that's the average of the buyers and the sellers. So the averages are still, hovering higher, are still holding the 20 above the 50, and that price is hovering there. You know that sooner or later it's going to break. And if you've got the ASX, it doesn't look like it's going to come down. You're happy to hold that, just expecting that push, to further highs or to that run up to the highs. So at the moment, we're really just sitting around waiting for a partial, hopefully at 56, hopefully into the close today. And our entry is 45. We're going to stop still at 41. The momentum's up at the moment, and that was thanks to today. And we're on this is the 1 hourly chart. And you can see we had a leg up here, pull back, consolidate, a good leg, and this is the part of the secondary leg up. So if we can get a bit more of a run on, we've got these sort of levels up at, there's one around here, 56, 56 and a half, and then a little minor level at 62. That should give us a partial. And if we get back up into this zone, that's at 83. I'm not sure whether I do expect it to get there, but if the ASX breaks to the upside, like we just discussed, this kind of scenario, then expect AMA to go with it. All right, so that's pretty much all we got. What I want to look at, I'll quickly go over some stuff that I've got on. So there's nothing really intraday on the indices at the moment, unless it sets up. So we've got the SPY we just spoke about, potential short, but that's of course if it doesn't play off, then you've got your shares. So we've got as a gold, so gold's running. Actually, let's just go over to gold. I just want to touch on gold. I'll get up this chart here. All right, that should be doing okay there. So we've got gold. Oh, it's gone. So look, this level is just kicking off now. So that was sort of hovering around these previous highs from what I think it was April, 15th of April. Yeah, 15th of April, holding higher levels. So that's looking good. That's a 4 hourly chart, so it's long enough. it's longer term. It is overbought here, but that doesn't mean too much once you're trending higher. If it's in a trend, it can easily back off. You might get a pullback. If we get that sort of reversion to the mean style, meaning back to the MAs, we might look for that higher low to see if that run could kick off again. But I'll keep an eye on that. All right, so gold's kicked off, which is the reason why we've got gold shares. These are all the gold shares here, 6% up, 9%, 12%. Yeah, in all honesty, it's really hard to get onto any of those now. And I didn't believe gold was come on, so I've sort of been left on the sidelines. But again, I don't care because there's enough stocks to trade. We've got BGL as one that, if I want to jump on board anything that potentially has got some upside, you look at that. That's your weekly. All right, so if we look at this, I'm taking this more as a washout. It's still sort of rangy between, see these 65 zone and potentially through 47. It's still relatively rangy. That was a good flush out. And if you go back to the weekly, that flush out there and it starts to rally again, that could be a good opportunity on its upside. But we want to get through 70 or thereabouts. So back down to the daily. If we get up through 65, 67, the only real high we've got to contend with is at 72.5. And I'm only looking at this one because it's really the only one that I felt there's a good setup potentially to play out as long as gold keeps going. Whereas a lot of the others, look at Saracen. I'd be short that rather than long at this stage because of the big gap up. If we go back to the daily, that's gone too hard for me. That's just powered on. That to me is just dragging in buyers. They're getting a bit euphoric, and then bam, it's going to sell off and squeeze them all back out again. Not saying it will, but that's the potential. So long is not for me. That's St. Barbara. Don't really want to get long until we get the first correction. So you want to see something. We've flushed out these highs. You want to see the pullback. If the pullback sticks at the MAs, then it's worth going long with that. Back on the MAs, but you've got some time to see what that does. It's stretched up here. Looking at those stochastics, there's not a hell of a lot of volume that's come in. There's good volume got flushed out here. Your volume sort of is ever so slowly coming off as we go in the highs. It's not a good sign that it's just going to keep going. You want a pullback, and you want to see a pullback supported with volume, and then it's worth potentially jumping in. If this just keeps on going, I wouldn't suggest it's funds or anything buying it. I think it's more retail, and if retail are buying, there could be some cause for concern. But we'll see. Northern Star, that to me doesn't look too flash. And again, they're all sort of getting to extremes in the upside at the moment. Oz is probably just not the best of stocks, but that could be a buy on the upside. Look at this. So we had a big flush down, pop up, consolidation here. If we get through 9, that's worth that. Look, that could be worth a buy. It's holding the MAs. The setup's there. I just don't know why it hasn't gone today. Anyone could probably tell me what they think of Gore's. Okay, yeah. I'll look at that in a sec, Pete. But Oz, anyone can tell me why that hasn't kicked on like the rest of them? It's up 1% today, but when you're considering 9%, 6% gains, 3%, this is kind of a Northern Australia not doing so well today. It's up 3.8%. AQG, which that one has just gone bananas. We were looking at somewhere earlier, but it just didn't look. It didn't really set up for me, which is a shame. It's probably just getting a bit biased to the downside, which and gold really didn't kick on. RL, I do like that one. It's glad that you got that one. Again, those flushes lower have been that sort of flush lower, then it's been soaking up in the MAs. It's gone a bit harder than what I would have expected, and that is well and truly stretched at the moment. I was looking at PRU. Okay, what was PRU doing? Perseus, that's on the weekly again. We're up to these highs at 120. I want to see that momentum after this big flush. If we can start to, we get extended. Most of the time when it gets extended, you can sooner or later you're going to expect some profit taking. You're going to get a pullback. And what we're always looking for is that pullback to the MAs, pullback to the MAs, pullback to the MAs. If that pullback sticks, because the MAs are pretty much flattened out, we've had a run up, pullback, flattened out. If they're going to start to go again, you want to see that momentum stick. All right, so that's what I'll be looking at on a lot of these. But BGL, that's starting to rally. It's holding the MAs. It's looking okay. And like I said, what's the other one? Oz is holding, and if it starts to break the upside, you've got this good rally. That's your first sort of not really pull back. We did pull back here, but I consider that all part of one leg. So the longer we stick around here and holding these levels at, say, 850 and below, the longer we hold that and we hold the MAs, that's going to drag in some buys. You know, if we can push up through 9, we've got our risk just below, and just see what happens. See if we can push back up to $10 and get extended like the others. That would be great. So let me just bear with me 1 second. Get rid of that. All right, so we've got those two. What else we got here? So Nick, there's a few that I'm just quickly looking at intraday, and that's probably gone, no my luck. Yeah, it was more the daily. I think the daily's gone a bit. Don't mind that. I mean, you can see that the market's pushed up, consolidated sideways, went again up to 60, pull back. We're stuck on the MAs, big flush lower towards 50, and it's being rejected on Friday. Today's an up day, so I mean, potentially if we can hold this and we can push up through 60, I think they could target up towards, you know, we're going to have a bit of a minor resistance around 62.5, but it could be pushing to 70. But that'd be a shorter term play as well. Don't mind that. MMS was another good one. See this? Big smacking. It's a beatdown, really. We've got the volume starting to ease off a bit here. So easing off when you're pulling back is not a bad sign. So I'm actually got, I don't mind this one at all. There's my intraday. If we can pull back here and we start to lift again, especially on the 30, you can see it's starting to set up, and we can potentially buy through 740 with a risk wherever it is, just say it's at 710. But I'll be looking for that one on the 30-minute chart, knowing that potentially this daily is starting to show some good signs. And that daily, you can see it's big flush lower, consolidate, tried to go lower here and just couldn't get on with it. It touched down towards 6, traded at 6, and that was soaked up. And then what we've done here with this little rally up here, taking out these previous highs, consolidated again. If we can stick around these MAs and we don't get any, you know, I really don't want to see it get further down, then there might be that goer push through 750 thereabouts, stop just below, see if we can take out 8 and see if that start to get a bit of a run on. Because the weekly's looking okay. I'll probably have to take a better. That weekly is well and truly, it's been smacked down, and we're starting to hold 6, which leads me to believe even if you take from low to high here, take from low to high, it could press up through 859. Okay, but we'll just have to see how that plays out. All right, so that was MMS, LYC, Linus. That to me, it's been a big bounce with no real, sorry, it's on the daily, weekly. Big bounce with, I don't consider any of that. I mean, that's just, if you got into that long, that's sort of guessing. I didn't see any retest of the lows, which I always like to see a decent retest, hold, and then buy for high low. It didn't really play out. It just went down, been grinding up ever since. But that's still, you know, it's still holding the MAs here. There is potential for a buy on a break of high of 184, 185. And again, this all plays back to the ASX. ASX looks like it's kicking in. Then it's worth buying on the breakthrough there. Stop below and see what happens. See if we can drive up to 210, 220. But we're not going to be trying to go for the moon. We're not trying to go for any big, you know, it's not a big swing. That makes sense. We're not trying to make any massive gains. If they come, that's great. And we've got smaller risk. But if they don't come, that's fine. We'll take what we're given, if we're given anything at all. OML is, so OML is something we've had a few times now. We just start to look at this a bit closer. I don't remember where we got out, somewhere around $1 mark. I think the final exit, I can't remember now. AP's kicked off. So these are ones we've had before, just recently. So that's OML. So we've got a big sell-off here. That's cleaned up a lot of buys, put a lot of people back on the sidelines. Now, if you believe in this stock, if you're a fundamentalist and you believe in it, and whether you got stopped out here or not, you might want to add. If you did get stopped out and you're kicking yourself and it starts to buy, you might just be looking, okay, that's the low, I'm buying back into it because it's got a good story. All right, and there might be some funds buying back into it. because it's been a suppressed price. They still think that it's worth $2 a share or whatever, which gives you a lot of upside. Now it's been grinding back up. We took a couple of good entry. I think it was an entry in here. So push up, second entry sort of in that second push, and then it keeps holding. So what we've done is pushed it back above the MAs, the 20 and the 50. This is a 200, 20 and a 50. It's sat on the MAs again. It's gone again. I think that's where we got stock on the last, because you can see that squeezing in. So the 20 is above the 50, but it's coming right into the 200 MA, meaning that people would be looking to potential, this is not the unknown anymore. And remember, we're trying to buy in the unknown, not the known. So the unknown was that first entry, back in here. We bought on the unknown then because that was, the first sort of push high. It's pulled back. There could have been some sellers in here going, oh, that's it. It's not continuing on. I'm bailing, and then it starts to hold a higher level. We bought in here. Okay, it's run up. We've proven, and it's gone again. So it's gone 1, 2, 3 times. So it's not particularly, that's the hardest thing about this trade. Look, it could hold, it could stick, and it could go up through 110, go above the 200, and away we go. But we just got to make sure that we understand the probability of it. The probability of this trade, that it's not the unknown anymore. It's becoming more the known. We know that it's grinding higher. The ASX is grinding higher. Now, if the ASX takes a turn for the worse, it starts to roll, this will probably go with it, I would expect anyway. Or I expect at least there's going to be no more buyers on the sideline. There's going to be someone wanting to take a profit. But if the ASX goes, there's no reason why this can't trade up through 110, or at least this high of 107, buy at 108, it stops just below. We're not taking too much risk, and it's continue on what it's done previously. And if we can't get up through highs of 113, then you've got to think twice about holding. Okay, but it's still holding those MAs, which is what we want to see. I mean, we don't know whether we're going to be right or wrong, but we're just trading the action that we see. And sort of, like I said, allocating a probability. Here is more the unknown. High probability that if it's going to go, we're going to be right. High probability it's going to kick off. But once it becomes a known, and everyone, so what I mean by becoming the known means, we've probably said this before, people have entered from the sidelines into the market. They're either in or out, all right? But that fuel has been used up. So once it becomes more of the known, we're not having an infinite amount of fuel to jump in or buyers to jump in. We've got a finite, if that's the word, amount of buyers on the sidelines waiting to come in now. Once you're becoming the known, we're using up more and more of those buyers. So if we're going to jump in now, can we really expect that that's just going to continue plugging away for us? Is there enough people on the sidelines that are willing to come in and give it a nudge higher? And is that worth the risk? That's all we're trying to assess any one trade. Mel, BGL, we said all that. So we've pretty much gone through what I just wanted to touch on. We looked at the ASX. So feel free to put in anything that you want to have a look at, and then we'll just get into it from there. I've got a feeling that, oh, that's okay. So yeah, put in anything else that you want to have a chat about. It could be a currency. Actually, let's just look at the currencies. Let me just get my. So gold's gone. Some of these currencies, the Aussie's following quite nicely. The Aussies, I said that looks like it's rolling, but don't particularly think it's, because it looks like it's rolling, doesn't mean it is. It could just be a setup. It's simple as that. Aussie. All right, that's good. We've got a few people wanting to look at the Aussie. Might as well continue on with that. So if we go, we'll start from a daily and just work our way backwards. Now that sharp move down, so that's oversold. That took out quite a few longer term levels as well. When you take out longer term levels, you're going to expect a deeper push. If it's taking out a daily support or a weekly support, when it takes out a weekly, there's a lot more sell stops you'd expect under there than a daily, and then a hell of a lot more than what you'd say under an hourly chart, hourly support zone on a. What am I talking about? Under a support zone on an hourly chart. I spat that out finally. So when you're seeing that kind of thing, that's just cleaned up a lot of buyers. To me, that's a spike low, cleaned up a lot of buyers that been sitting there thinking it's going to bounce, and they've got I've got a strong support zone. I put it under the weekly. That's just taken them out. All right. So if that's the case, then we don't particularly need to retest it because it's cleaned out a lot of people, and what we're doing is resetting, and resetting could be just grinding higher. So this is the daily. You can see. Actually, just have a look at that weekly. That's the level I was looking at. Let me just draw that out. So it's really that spike through there, and I think we even retest it on the daily basis. Oh, actually, let me just take one step back again. It's not only that low. Oh no, it's not really, is it? Yeah, it's a bit of action through here. You've seen not a lot, but it's sort of swinging above and below there. Sold off, come back up, and retested in here. So it is a zone where it's seen a bit of action. Back to the daily. Now the daily's completely sold off through there, bounced straight back up, retested back into that level, and it's been found support, and it's started to rally again. So that rally could keep going. Being a weekly, that could just continue on up. So the daily is not saying a sell. It potentially, we could be starting to get heavy. And this is what we're saying about double tops before. Just because you touched a level twice doesn't mean it's a double top. I think a lot of people technically get that wrong. So if we're looking at this daily and we go, oh, it's touched here, let's sell it. Okay, because it's touched and failed. You might be selling off a candle. Now, it hasn't broken any anchor level. And because it's sort of getting a bit long in the tooth, that run up, there's a few less people willing to buy it. But if it doesn't break an anchor, so to me, this anchor is, 63, 65? This level through here, that's your anchor level. Now, if we don't break that, that's not particularly a double top. Okay, so at that stage, when it was, before we actually retested that level, the anchor was down here. Okay, hopefully everyone understands what I'm talking about, anchors. Anchors to a trend up. So you've got anchor here. It's just a higher low. Anchor here. Sorry, just 1 second here, guys. Ask me I'm talking. So you've got these are your anchors. Go away. There you go. So trend up, pull back. That's your first anchor. It's only an anchor when it breaks the high. Okay, it goes up, pulls back. So the anchor's down here. You start to break through this high. That becomes the anchor. Run up, pull back. At this stage, when it's down here on the lows, the anchor's still down here. Once it retests there, the anchor can move up. All right, that's just the way stocks down to how I would trade things, how I start to assess the anchors, how I start to assess the trend. Okay, so now we've got, so we can probably take away this level. We'll take away that just to clean it up. So for me, that anchor's down here. All right, so the fact that we've touched on that double top and we haven't broken the anchor doesn't mean the trend is over. We could chop around here, we could do, and what it'll do is it will soak up and it will bring in, there we go. It will bring in some sellers. This is off the daily time frame. Don't forget, it's a different time frame once you start dropping it. We're on the daily, so if there's daily traders that just trade off the daily and maybe longer term, they're looking for a bigger move. If they're looking for a sell, the market can easily chop around here, start to lift and squeeze them all out. So what it's doing is dragging in some sellers. The trend hasn't changed, and it's just consolidating those highs and then turns around and squeezes them out. So it's a bit of a setup. Okay, so it's setting up some sellers and turns around and squeezes them. If that's going to be the play. Now, if we take out the anchor, then I'll probably be looking for the lower high to sell into on the daily. All right, so it's all going to take some time, but that's the way I'm assessing things. If we start dropping it down to lower time frame action, we'll go down to the 4 hourly. There is the potential that just what we're talking about could be playing out as long as we hold above that. So that's not technically a double top. We've pulled back. We've confirmed this level, come up, sold off from those highs. So you've got sellers starting to step in for whatever reason. Potentially they're looking for the US to roll over. Now, if the US doesn't roll over, it's probably going to drag the Aussie higher because that's been the theme lately. So if we start to break up through this level, so that's the downturn. If we start to lift through that, then I'll be looking for that higher low in here to see if they can lift us all the way back up to the highs. All right, so that's off a 4 hourly, and then you could drop it down. You might be trading off a 30-minute, but that's what I'll be looking for on the longer term. So you've got a little minor inside, not double bottom, but inside support zone here. Again, that's not a support. If we come down and we start to fail off a higher level, then you know that There's more than just myself looking at that, and we start to buy. And then even if we get some shorter term action, just tell me if this is making sense or not. But if we start to fail like this, well, I'll just change this to a different color. Blue, that'll do. So if we get this starting to hold, so any people that's trading on a shorter time frame are starting to look for weakness because that's been the theme all the way down. This is a lower high. We're going to drive through that low. If they start to look at that and we get this kind of action, I'd be happy to buy into that on the shorter term and sort of anticipate this break of this downtrend because you know that there's going to be quite a bit of fuel stacked even on the short side. But again, the currencies have to be, you have to be, on the ball, I guess, is one way to put it. But that's what I might be looking for on the shorter time frames, off the 30 say. But off the longer term, if we do get up through this level, then wait for that big correction and then maybe go down to your 30 for an entry somewhere in here off that pullback because that's a key higher low. This is only a shorter term higher low. This may lead to a retest up here, fail below this level, and continue this downtrend. All right, so that's my plans at the moment for the Aussie. Again, it's political, but I've got a couple of scenarios that I'll be keeping an eye on and to see what happens. That's the Aussie. We had GOR, SOH. We looked at those, Gore and gold grade. Let's just go over here. Yeah, so gold, I mean, if you're long that, it's great. You know where your risk is. Just see if it can get up through 180. If it fails again at 180, even lower, below this low, that's going to be a bit of a problem. If you fail below this low, yeah, then that could easily start to sell off. But again, and it doesn't mean anything. You've still got that could just, because it's extended, anyone in their right mind, would you buy it today? Probably not. I wouldn't because I don't know where I'm going to put my risk. And I don't want to do it intraday when it's so extended on the daily. I would prefer something like this if it gets up here and that trend is a lot more, I mean, that's more sideways through here as opposed to rallying here. I would expect some sort of pullback, and if it can stick at a higher level, say 165, then great. Then there is potential for another entry, but I wouldn't particularly buy it up there. If you bought it already, then you got to I guess, hang fast, hang tough, and put your stops below 150 potentially, and then just see if it can do what we just said. If it can pull back, hold 160 and start to run, and if it doesn't get up through 180, you'd start to get concerned that it's not going to get up through 180. All right, so that's pretty much the scenario on that. That's your higher low. That's the most recent higher low at around 150. That's confirmation. You've got this sort of grind into it. It's taken off, not so much today, but on Friday. That's confirmation. You could have bought it into the close Friday. You know, if you're trading off your shorter term, your stop still goes below. It still goes at the same level. It just means you're up a bit today. So if you're onto that, Pete, from the other day, then great. But to get into it, I'm just waiting. I'll be more inclined just to be patient. SHV starting to run. So what you'd be looking at if you're not long, just be looking for a minor pullback. I just want to see a minor pullback, stick 775, and then if it starts to rally, then you can go long. So from here, if you're going to go long here, I wouldn't really want to be putting risk too far away considering this market, because it's always in the back of my mind, even though I said all that about the ASX, that this market could cave in at the drop of a hat. All right, especially in the US. If we could be up 70 now into the close. US drops 1,000 tonight. Don't expect us to be rallying tomorrow. You know, we'll probably be down 200 tomorrow if that's the case, and then that's going to be a massive gap on a lot of these stocks. So you just got to bear that in mind. So that's why it's always good to have an idea of what's happening in the major indices. What are they looking like? They're still getting supported. Okay, we'll take the chance. We'll buy into some stocks, but you don't want to buy into something that's stretched. You want to be looking for something that's has got some upside and looks like it could run. Because that way, like I said before, we're getting into the unknown, not the known. So this here, leg up, as you pull back, if we take a leg up from here, 625, so 525 up to 775, what's that, $2.50, takes us to 875 up here, if that's going to expand up. So 875 to mean, I'll draw it up for you guys because I think there's a lot of people just going, what? Let me get that drawing. My drawing tool. Is this all making sense? So the scenario here, what we're looking at is that's the run up. So we're just trying to measure it out from low to high and extrapolate. I'll take that as a low, not so much in here. I'll take that as low just to give myself, I mean, if I'm wrong and the low is here and we still get to 250, then I'm looking up here, no harm done. But if I take it from here and I'm expecting 925 and I'm holding, but it's going to go to 875, then there could be some harm done. So I'd rather take that out and extrapolate it out to around 875, and that's just same from low to high, the same measurement, say 250. That's potentially a target. Are we too late in the trend here? Maybe, maybe not. Wouldn't mind seeing we've just run up here. If that's the run there, I wouldn't mind just seeing some consolidation there and then look for a buy, and then exactly you've got smaller risk. It's continuing on, and then your target's up towards 875 or beyond. We could even fly up to 925 or thereabouts. But either way, you're going to be up, and you can manage your risk as you go. The only problem is we are getting a bit extended up here. That flush out down the lows was quite good volume. This run up here, support in here was decent volume than what we had the last few days in here, higher volume. But as we get higher, we potentially, if we're running out of volume there, we might just need to correct a little bit, bring in some more buys at a better price, and then see if we can get that kick on. So that's SHV. I had loose space. Yeah, it is loose because it's been a bit whippy with that stop, but still there's a trade in it. I wouldn't buy it here, but there could be a trade, and I don't like the fact that it's a bit overcooked up here. Last time we're up here, say for instance, we're a bit overbought. We haven't got that far through that high, and we failed all through here, and we had the bit of a flush out. So that flush out's a good thing because it's flushed out. We couldn't get through here, flushed out that low. What that's done is it would have stopped out without a doubt. I pushed through that low, stopped out people that bought it in here, stopped just below, took them out, and it's taken off. So that's just a cleanup. Okay, anything else we'll look at? Pull back, buy and watch, yeah. All right, so we've got SHV. Let's just look at and get through a bit now. Net wealth, I don't mind that, the way it's consolidating here, but it's not down on the lows from the big push lower. I would rather say this consolidation. And it goes back to, I can't remember what we traded. APE. APE is a good one. We've had a couple of nibbles at that, but you see that massive flush down and it started to get supported. Okay, with some decent volume holding up, as opposed to volume through here. That's not very good volume as it's starting to get sold off. But once we got that big flush lower, we had a lot of upside when you're talking moving back up to $9. Okay, from $3. That's a $6 potential rally. So we've had a couple of good trades in that, but it was hovering around down near the lows. Now, if we go back to NWL, it's not hovering around down near these lows. It's in the top half. So it's where it started to sell off. That, to me, not the world's best trade if you're going to go long. And there's nothing here. It's kind of not holding higher lows or higher or lower highs. It's just sort of consolidating sideways. You've got a range between 8 and say 7. Chopping around that range. So I don't see that as a really great one to trade, especially on the long side, because again, back to the ASX, if we sell off here, that'll get smashed. Okay, and if we just grind high on the ASX, because there's still some bears out there, how much further can this go? Can this be something that you're willing to take up to $10, to get 20%? I would say it's going to run out of steam at 850. Then you've got more resistance zone. You've got too many resistance zones to get through to make that a high probability trade. So yeah, even if it does set up, it's worth a go. But is it worth putting too much into it? Yeah, it could be something to trade. But it's not a high probability the way I would view that. SHV done, Aussie done, SHV done, EOS. All right, so EOS, it's a mix. The big bounce back there was pretty much a gap down and headed south. We tried to go again here, and we've got sellers coming back in. So, big sell-off, push back up. So that was a euphoria buying across the market when we got the bounce. It got to $6. It got gap down, and then I don't know if that was news-based or what it was. It's holding these minor higher lows, but we're still coming into some trouble here. I would much rather see a bit of time go by and this hold. We can chop around 450, and you just get the volatility come out of it and we start to get a level where we could minimize our risk, because at the moment, if you're going to buy it, I would want to buy it through that high with risk below. And to what's that? $1. Say it's over $1. It's over $1 risk, and if you're buying it at 5.50 and $1 risk, it's 20%, give or take. Stop. Not happy with a 20% stop. I'd rather that a lot smaller. Where the volatility. So what you're looking for is volatility contraction into volatility expansion. So it's something like this, contraction here, a couple of days of nothing, bang, up we go. A couple of days of nothing, bang, up we go. Not so good here, but that was volatility expansion, contraction into expansion. Same here, we contracted here, expanded a bit there, but sideways, and then it started to really lift. Okay, that was a good lift here. Even in through here, sideways here, holding good levels. And then you got it, not until we got sort of near those highs, you got a bit of a volatility expansion here, going with the MAs, everything was looking great. So that's what I'd be looking for, especially after this big sell-off. I want to see the volatility contract, and by that way, you're going to get the higher lows squeezing on the lower highs. I'm doing it with my hands, and I'm pretty sure none of you can see it. So you got a big sell-off here. By that, I want to see, volatility start to contract. Volatility contracts, it's going to leave us with something, like that. And it's quite easy. We know where our risk is going to be. If we change the color, we could either be looking for it to break up, break a lower high, we buy, and we got to stop below, or it comes slamming down and we sell through a lower high with our risk above. But either way, you're boxing up the trade, whether it's buy or sell. Boxing up means we know where our entry is and our risk is below, and we want that as small as possible. All right, so with EOS, I'll draw it up. I'm not really seeing anything too crash hot at the moment, because it hasn't proven itself just yet. I mean, again, I'm not a fundamentalist. It could be a cracking stock, but you've got low here, low here. We could just come in, you buy it now, you get another low, and then it wipes out that low. The ASX falls apart, the US falls apart, and it's taken out the lows. Just because we haven't quite, nothing's proven itself just yet. If we start to, like I said, lift through 550, then it's starting to prove itself. It's a different story, and then it means your base is going to be around 4 off these high lows. And then you're looking for, I'll draw it in a different color. You're looking for, that's your first leg up, that's your base, that's your secondary leg up. We could be looking at it through 7. That's what I'm looking for. But at the moment, it hasn't proven itself. But worth keeping an eye on, Jason, for sure. Buy, sell, hold. I think I covered all of them. I've covered a reason to buy, a reason to sell, and a reason to hold. There you go. But yeah, if we can get that, if I want to see that level hold, that would be great. If that starts to hold, then for me, we're starting to lean to the upside. All right. But you can see the MAs are still down here. 20 and the 50 are going sideways. So 20 and the 50 need to be going up, not sideways. Sideways could be anything. And that's a hold for me. If they start to push up, that's a buy. We just want for the entry. And there's nothing you're really playing at just yet. All right, XRO. XRO done. All right, XRO we've got here, haven't we? All right, that's choppy to me. I don't like the way, see these, I'll make that smaller. There's a lot of little things, because essentially we're just trying to trade momentum, whether it's on a daily or weekly, or it could be on a 30-minute chart. We're trying to trade momentum. If we start to look at intraday, momentum's down, clear. If you don't want to sell it, you're obviously looking to buy it. Now, I'm not a big fan, and this just goes into what we were just talking about. I don't remember the stock. We were just talking about, was it SHV? No. It was NWL. And we just said NWL, I'll put it on this chart, had made back, is that the daily? It's the weekly. Oh, no. It wasn't NWL. Oh, that's NML. That doesn't make any sense. NWL. See this big sell-off, okay? It made a lot of it back in a V-shaped recovery, and now it's consolidating sideways. So the potential for the upside, I see it's higher potential to clean out some of these traders, okay? So just say there's sellers in here. It's cleaned out a lot of people, a lot of fuel on the downside to get squeezed out. It's squeezed them out already. So now it's sort of biding its time to figure out which way to go. And I don't want to be involved in that. So if we go to XRO, it's something along the same lines. It's big sell-off here through March with everything else. Big bounce back. So your trades would have been on the shorter term probably around this zone somewhere, just below 70, and then you're sitting in some profit at the moment. Now, the other thing I don't like is, let's go back to that. I mean, I could tell you what I don't like. It's pretty easy. That's kind of, it keeps touching on that. So it could just keep rising, keep touching, and it's not going to go anywhere. So depending on how you trade, if I trade, I would have bought on that break, for instance, with my sell below. I've just been stopped out and it went nowhere. It basically sat me in profit for a while and turned around and stopped me out. I don't like that. I don't like getting stopped out of anything. But to me, that's looking more heavy. So if we come now after this sell-off, especially after these previous few days of just a grind, it's even on a couple of the days, I'll measure it here. On this day, it actually gapped down below the previous close. It finished on its high is great, and here it's gapped down again below the previous day's high, and that's not a strong sign for me at all. If this market's strong, or if this stock is strong for whatever reason, there's a lot of people want to buy it, shouldn't do that. It should just, it should be doing something like this: open, close, open higher, close, open at the same level, close higher until it starts to run out of steam. That's not doing that. It's either it's manipulated or whatever's happening. That's not happening. We're not signs of strength there. So if you go back to this chart, that you could even say that we've got a zone through here. Let's just clean it up. That there's sellers. The zone through there. Okay, we pushed above, but we're back below it. What I'd be nervous of seeing is, we've popped up through big sell-off. I'd be worried that we're going to get a lower high come to play, and then you've got your potential short on your hands. I think that's more the anchor level, just below 75. It's still holding that. If that starts to break, I'll be concerned about being on the long side altogether. If that holds, you want to see something like here. That's an inside level, which we're happy to trade off. It just didn't work out. That's your inside higher low. You can see inside higher low, push up. You've got your pullback, started to rally. Sellers are still not finished yet, but buyers are still strong, if that makes sense. So when you get that, changing it from moving down to change it up is about buying strength. Okay, that turn there is selling strength starts to come in. But buyers, if they build this inside level, that's your inside level. That's a good little trade. That means that buying is still strong, and it's going to start to squeeze out those sellers. Okay, and then you can see that in here. It didn't go anywhere because we got smacked back down again. So, but it did take out the high. Basically, when you see that setup, you expect the previous key high to be taken out, which it did. Took out this level, but then it's turned around and got sold into. So in saying that, what I would like to see is above 75, this kind of play. So that's 75 through here. That's your zone through there. I want to see this play out. Inside level, which means that I'm going to start attacking up towards 85 and potentially right up to 90. That would be a play off an inside level where we can easily manage our risk. If not, we really just got to wait for a setup. If you're not in, wait for a setup. If you're in, you're really going to be conscious of managing that risk, because that last few days does not look good at all. Right. That's in my opinion anyway. So we've got HZR, and we'll finish up there. HZR, that's showing a bit of weakness in my opinion. Look, it's really whippy. We've got this move up here. That was just into the sell-off. It took out the highs and got smashed. I can see it somewhere else. It doesn't traditionally get through the highs very much. I'm trying to look through here. I mean, here, we didn't get a big run on. Like, by run on, I want to see that. But instead, if you marked up this and just draw on it, draw your pretty lines. Oh, that's what I want. You can see move up. So that's your high. Deep pullback here. Didn't get through that high by very much. Before we had another pullback, basically to test that low. Rallied up. Didn't get through that high very far at all. Deep pullback. So by deep pullback, that's your leg up, deep pullback. You don't really want to see, you'd be happy to see the top third, a pullback within the top third. So, if we're going to move up, that's your move up, split in the third, that's your high, that's your low, bottom third, top third. You want to see the pullback stay in that top third. That's a sign of strength. The deeper the pullback is not a sign of strength. Okay? So that if you stick by that general rule, if we start to go to a 50% pullback, that means there's some sellers willing to push it down, and buyers just want to hold back and wait for a deeper correction because they're not too convinced. But if they're convinced, they'll be buying it up here in that top third. Right, so we haven't seen that through here. We got that run up through there. That was the first time. That's your leg up, top third, essentially. That was a great buy, and you can see the way it's powered on. Right, then we got a deep pullback. So that's big of part of a bigger trend. But that pullback there, off that high, is, if that was a really strong stock, I don't think that should have happened because it's cleaned up this high low. It's putting pressure on all these buys, the late buys at least. It squeezed them out. It has gone again. But again, on the bigger time frame, you've got this push up through here. It didn't take out the high very far as well. So it just leads me to believe it's a traded stock. It's not an investor stock. And then off this high, of course, that's cleaned up and we've gone right back down to the start. So I'll take that snapshot again. We'll draw that up. So that clean up there has probably taken us right back to 26 zone. It has reacted off 26. That's not a bad. If you've got it, you can see that nice little entry through there off the fact that everything was starting to bounce then. All right, but now, are we too late into that trade? Are we too late into that move up? Because I know there's a lot of people now. I mean, I would be questioning. I'm not willing to have loose stops on my trades at the moment, and I'm always questioning getting into something. I want it to be a high probability setup to buy into something now because of the bounce we've had on the ASX and the overall markets. I mean, the Dow's starting to look a tad heavy, could tick on. We don't know that. The ASX is looking heavy. The DAX is looking heavy. The UK, they're all looking heavy. Okay, the indices, which would lead me to believe there's going to be some heat coming out of those markets, potentially. I mean, it doesn't have to happen, but if that's the case, and you're buying into something, a stock that's had a good bounce already, is it a high probability entry to buy into that now? If you're holding it, all you really got to know is where your risk is. If you bought it on this break, your risk would be below here. You're going to book a profit and see where it goes. If we start to hold here and start to lift up to these highs, raise your stop. It's as simple as that. And if it doesn't stop, if it just keeps going up and up and up, then great if you're long. But if you're looking to get long, I'm not convinced this is the best time. I want to see a flush of this overall leg. So I'm always looking to see, that's your leg up with your higher lows, higher low, higher low. So if we draw that in, we'll draw that in one color, say pink. Pop up, pull back, pop up. That's probably not the best color, is it? We'll draw that in yellow. Yellow. So this is all one leg. So if you bought this leg, you're just buying into the leg. You're not buying into a major move. You're just buying into that with your risk already set out. That's your leg up. So at the moment we're here, your risk should be below here. If we hold a higher level and we get up to this 44 zone again, you can move your risk up. But this is all part of a bigger leg. That's down, that's up. We've retraced quite a bit of that. There's a lot of buyers that start to stack up, and we're starting to potentially run out of heat, buying heat or buyers to continue that move up. And we've got some potential buyers that have bought up here to get squeezed out, and that leg could be right down. And then I'll be looking for a higher low in there. So if you can see what I'm trying to mark up, it's all within context to different levels, different legs. There's legs within legs, if that makes sense. You got a weekly leg up, could be a straight move up. If you break it down to the daily chart, then you'll see the swings. And that's what probably, by using that technique, if you're trading off a weekly chart, for instance, and that's your trend up, you're looking for that, okay, that weekly leg up is confirmed, I'm buying into it, but I'm buying into it on a daily time frame because I'm trying to get out as much of that leg out as I can, all right, with risk. And I'm trying to squeeze out as much as I can. Now, if you trade off the weekly, you're going to have wide stops. You could miss out on something completely and get stopped out of something which on the daily you could have taken a really good trade out of. I hope that makes sense. But anyway, we might have to call it a day there. It's been a minute, hour 10, so I can yabber on quite easily. I hope that helps. If there's anything you want to question, feel free to send us an email, support@tradesetup.com.au, and I'll get back to you. And if you do like what you see, it'd be much appreciated if you can pass the word, give us a like, follow us on Twitter, and we're going to be putting up more information as the time goes on. So thanks for joining us, guys. Have a great day, and I'll speak to you again soon. Cheers. Bye.